Hello and welcome to Taking Stock, your weekend dose of the market action and of course the cues to watch out for in the week to come. I'm Sonia Shenoy and with me is Anuj Singhal. Anuj, what a great week it was for the markets. We ended the November series on a high. We started the December series with a big bang and we have some big ticket cues to watch out for next week as well.
Indeed, Sonia. You know, three things stood out for me this week. One is that the Bank Nifty still has momentum. The PSU banks in particular still have momentum. And the Bank Nifty was up 2.5% in the week gone by, while the Nifty was up 1%. And the other thing is that quality stocks are making a bit of a comeback. It's been about quality. On Friday, the advance decline was actually negative. And for the week, the small cap index was actually in the red. The small cap index was down 0.5%, even though the mid cap was still okay, up about 1%. So you do get a sense that you're now reaching a stage where maybe from here on, it's going to be about quality stocks more than anything else. And that could be good news for the market. But given the way crude oil prices shaped on Friday, that really was the massive trigger. And now there's a lot of pressure on the RBI governor to cut rates. Whether he does or not, that would be the next trigger.
Indeed. In fact, all eyes will be on that. But let's welcome our guests now on the show. We have Dr. C.K. Narayan, Managing Director at Growth Avenues, and Nishchal Maheshwari, Head of Research at Edelweiss, who joins in. Gentlemen, thanks for joining us on Taking Stock. Nishchal, I want to start with you. The big trigger that we had on Friday undoubtedly was the fall in crude prices. Sector or stock-wise, how do you approach that trigger now? What would be the good pockets to accumulate at this level, purely based on the fall in crude?
So I think there are two ways to look at it. One is directly what is going to be the fallout of falling crude prices. So obviously the subsidy burden goes down and you have oil marketing companies which you can buy. And the second one would be the derivatives of this basically. So all companies which have something to do with the with oil-based raw material. So something like paint industry, they have got titanium dioxide, several other industries, tire industry basically, they got a raw material based on the crude prices. So several of them are there basically and you can play through that. So I think this is two ways to look at and play the crude fall.
Indeed. CK, what's your call on the market right now? What was Friday telling you, especially about the next two or 3 weeks? Is the momentum still intact or are there some kind of warning signs? On Friday, we had negative advance decline ratio actually.
See, I don't think this is a market to be seen on a 2 to 3 day basis at all, because if you keep seeing it that way, then you have very narrow movements and plenty of intraday volatility, which actually takes toll on the way that you might trade. So I don't think this is a market where intraday trading or even day or two kind of trading is really paying off. What is really paying off in this market is, let's say, a swing or a positional play, or a multi-day to multi-week play, which is really getting in a lot of money for those who can engage in it. But unfortunately, hand in hand with that play comes clearly a skill or an ability to handle a lot of volatility that the markets keep showing. If you look at it from an overall perspective, then like you were discussing earlier with Nishchal, the falling crude prices is what is probably driving the trends quite strongly. You know, after all, we have about 2.5 billion worth of dollars going towards the oil subsidy, and I think a fair share of that, if it is going to get shaved off, I think that's something very positive for the market to look at. And if you really look at oil as the key driver of this market, then what would pay more than anything else is to really study charts of oil prices and see where they would be going across the next 2 to 3 years, and whether that could hold out a kind of signal for our markets and where our Nifty and the rest of the world could go. I think the world is certainly in for a significant change with the way the crude oil prices are. And I think we are going to see, lots of correlations as we know it, lots of truths as we believed. I think many of them are going to go bust across the next 2 to 3 years. So I don't think we should really take it across the next 1 or 2 days kind of thing. That's fine for extreme day traders. But having said all that, the momentum, as you asked me, is very much, very strongly intact, and I see no reason why they should dissipate.
Let's come to this Tuesday event, because there's a lot of pressure now on the RBI governor. Till about 1 month back, there was no possibility of a rate cut. Now, all of a sudden, a lot of people are asking, hang on, can there be a rate cut or can there be a signal of an early rate cut in this policy? If the market is disappointed, first, what's your call on the policy itself? And secondly, if the market is disappointed, can there be room for a bit of downside or a bit of correction from here on?
So our call still remains to be that there would be a rate cut in February, not in December immediately. That we continue to maintain, and though there are enough reasons for the governor to still consider that. But what I believe is going to change is may not be a rate cut, but his comments would be very, very dovish. And though the rate cuts may not happen basically, but I think those comments itself is going to sustain the market and push the trend upwards. So I believe it's only a matter of time now that the interest rates would be cut. And on that background, I believe it is good to hold on to interest rate sensitive stocks.
So is this a market that one should still buy into at this juncture, Nishchal, or do you think that through the course of the next maybe 2 to 3 months, you could get better levels?
I definitely think that some amount, 25% of the money should be invested here basically. Now the market has continued to wait and see, waiting for a correction, but I think there are enough and more people who are waiting for this correction to happen and jump into the market. So I think go ahead and invest 25% of your money, and then you can wait and see if there are corrections happening.
Okay. Dr.